one would have said this is a structural shift and saw a trading opportunity whereby you were gonna just put your entry on demand with your stop loss underneath your demand, and then you are targeting wherever that you want to target. And this is how the market was gonna move against you. It just sweeps through your stop loss and then it continues to trend all the way to the downside. Simple as that. What's good, guys? I hope you are doing great and everything is going proper. I'm back with another video, and in today's video I am going to show you how you can properly mark and identify your true market structure to avoid falling victim to fake break of structures, to fake market structural shifts, and to fake retracements. Basically, I'm just gonna show you how you can smoothen out your trading and avoid falling victim to taking unnecessary losses. And if you haven't yet subscribed, please do. And to those who have already subscribed, thank you, guys. May you continue engaging on this channel as I'm gonna share more and more insights to these trading markets. That being said, let's get straight into business. So what we have here is an example of an uptrending market. So with that, I want to show you how you can properly mark your market structure. So this was going to be our lowest point and this was going to be our highest point. And as you see POS here, that means the market broke above this high, breaking structure, creating this new higher high, and then moving back to point of interest and continuing the trend. Again, breaking structure here, creating new higher highs. And I want you to pay attention to this now. From this highest point, or should I say from this lowest point to that highest point, we call this a range. We call this a range. This is our lowest point and our highest point in this range of movement. And should the market break above the range or break below the range, that's when we consider it to be a break of structure. Now I really want you to pay attention. This might seem like maybe it's something that you are already used to, but let me just show you how powerful this thing I'm showing you is. As you see that the market broke above our range, as you see a break of structure above this high or our highest point, the market broke here, creating this higher high, meaning now our range changes. Our range changes from this lowest point. Now this is our current lowest point, meaning that our range changes from there to there, just like this. Our range changes just like this, meaning now this is now our lowest point and this is our highest point. And what you saw, the market broke above our highest point of our range, or the highest point of our range, creating a new higher high. And after creating that new higher high, obviously it's going to move back to a point of interest. And I want you to pay attention again, because the market broke this high of this range, meaning that this whole range is dead. We now have a new range, of which is from this low all the way to that high. Just put it like this. Is have a new range now from this low all the way to this high. And I want you to pay attention how the market moved inside here. One would have considered this to be a break of structure. One would have considered what is happening inside this range a break of market structure, but it's not, simply because the lowest point of our range is this and the highest point of our range is this one, and the market was just playing inside our range. So that's why we consider this to be sub-market structure, because the market was just playing inside our range. And once the market moved above this highest point of our range, that's when we got a true POS, simply because now the market just broken above our range or our highest point of our range, and that's where we get a POS, meaning we now have a new range from this low to that higher high that has been formed. That is now our range, this low being our lowest point and this higher high being our highest point. And we saw the market moving back to point of interest and again breaking above our high of the range, continuing the uptrend as it moves in a series of higher highs and higher lows. So now this is where it gets interesting. I want you to pay attention. This was our lowest point here and our highest point. This is our range, and this time the market broke below our range, indicating that now it is attracting bearish momentum or bearish power, simply because it broke below our low and then moved back to point of interest and then went all the way down. So understanding this is gonna help smoothing your trading out, because you're gonna know exactly which one is the true market structure and which one is sub, if you understand this thing of ranges, the lowest point and the highest point. So with this, I am gonna now go to the chart and show you how this actually works. Okay guys, now let's look at a chart example using USD JPY on 1 hour time frame, and please pay full attention to detail. And with that being said, you can see that the market was in a downtrend beautifully from this point all the way to this low. So now this was our highest point and this was our lowest point, and we had a break of structure around just here. We had a break of structure because the market impulsively broke and continued to push all the way to this low. Why don't we consider this a high and this weak rejection a low? Simply because this is a fake high and this is a fake low. Why is that? The market didn't give us a convenient retracement. And how do you spot a convenient retracement? You spot it by at least 3 opposing candlesticks, and you can see from there all the way to this low, this was a selling movement. And around here the market tried to give us a retracement, but it failed because we only had 2 opposing candlesticks. And in order for you to consider it a convenient and a proper retracement, you need to see at least 3 opposing candlesticks. And that is why this then became our low after the market tapped into here and retraced properly. And now let me show you the dangers of not understanding this little thing of knowing how to confirm a retracement. As I am saying, this was a fake high and a fake low, and one would have said this is a structural shift. As you saw that the market broke structure around here, one would have said this is a structural shift and saw a trading opportunity whereby you were gonna just put your entry on demand with your stop loss underneath your demand, and then you are targeting wherever that you want to target. And this is how the market was going to move against you. It just sweeps through your stop loss and then it continues to trend all the way to the downside. Simple as that. So now this was a fake high and this was a fake low. I hope you do understand that. And after that, the market created a proper low and a proper lower high, simply because after this low was created, the market gave us a convenient retracement and continued to break structure, trending to the downside. Now I want you to pay attention again to the momentum of the selling candles or the selling waves or the selling swings. From that point all the way to here, you see how impulsive this leg was, indicating that whatever that is going to happen next, the market is still supposed to trend to the direction of the original trend. As you can see, after this, the market retraced to area of interest and continued to break structure, trending to the downside. But notice after this break of structure, the market couldn't push properly to the downside, so it broke structure and quickly turned back to area of high interest. This to you indicates already that this second leg of a selling movement is lower in terms of momentum, is less in terms of momentum than the first leg of movement. This to you indicates that if not soon, later, this market is gonna be shifting the direction into bullish energy. This is gonna be shifting direction into bullish energy. And we saw the market breaking structure, moving back to point of interest, and again it broke structure. And notice again, this momentum of this last selling movement is lesser than all these previous selling swings, meaning that anytime the market can change or shift the trend. So swing momentum usually indicates when the trend is gonna end. Swing momentum usually indicates when the trend is gonna end. So let's just see if this momentum feed was telling us something that is reliable. Let's just see. There we just had a break of structure. There we just had a break of structure. Here we just had a BOS. And now I'm gonna repeat myself. I said that if the swing or the momentum of the swing is too much, that indicates that the market is still gonna trend to that direction it has chosen. And here the market sold all the way to here, and we saw it continuing with at least two more swings. And around here we just saw the market impulsively breaking structure and shifting the trend, because now that is a trend shift. This is a trend shift where the market is now shifting from bearish trend to a bullish trend, and the momentum of this structural break is showing to you that the market just broke all the way from this low to this new high that has been formed. And this indicates to you that the market just picked enough buying energy to start a new trend, and it's gonna continue buying simply because this trend shifting swing came with enough momentum to tell you that now the market is ready to shift structure going to the upside. And it is as simple as that, because this was our highest point, our lowest, our range got broken. Our highest point, our lowest, our range got broken. Our highest point and our lowest, our range got broken. Our highest point and our lowest, and now our range is getting shifted all the way from bearish to bullish. So that's how easy this usually becomes when you know how to properly mark your market structure and everything. So let's just see if this did give us a continuation of this buying movement that just started. And remember, now I just told you that this is our highest point and this is our lowest point. So whatever happens in between these two areas is considered to be sub market structure. Always remember that it's sub or fake market structure. These swings, or the highest and the lowest points, are your main market structure. So let's see if we did get a continuation. Of course, we're gonna get a continuation because the market has already represented to us that it wants to trend to the upside. And you can see we already have another break of structure, and the market just continue trending to the upside as it did indicate to us. Yes, the market continues trending to the upside as it did indicate when it shifted this whole trend. It came with serious momentum, and this swing momentum usually tells you that the market has just picked up enough energy to just buy or continue this buying movement. The market has just picked up enough buying energy, represented by how impulsive this movement was. So from here to there, the market showed you that what's coming next is nothing but buying energy. So remember this. It may sound simple, but it's very important. And thank you all for tuning in. If you did find something that you like and of value in this video, drop that like and give me a comment. Other than that, peace.